Good afternoon, everybody. Welcome to your Monday edition of the Trader Merlin Show. Hope you had a great day out there. Yeah, interesting day. Really, after we opened up on Sunday night, not a lot happening over the course of today. Certainly, there were some nice moves, which we'll talk about, but kind of an indecision moment, which is why I had the graphic for today. I have S&P 500, what's next for our 1,117th show. To start things off, now I know we get a lot of people that go late. Yeah, we should be going live. There we go. I know we got a bunch of people that will show up late for today's show, which is okay. So I will hold off on the poll here for a little bit, but I wanted to start with the poll, which I'll drop into chat there and see what you guys think. Really, my poll question is, what will the S&P do the remainder of the week? Not a long time frame here, but we've had one of the biggest bull market rallies in like the last 20 years on the S&P 500. I'll bring up the S&P chart here so we can take a peek at that and show you what we're talking about. Here is the S&P. If we go from the bottom we achieved on April 7th to the peak we had just on Friday's session, you're talking an 18.48% rally in 18 days. That's basically 1% a day. Awesome. Absolutely fantastic. Now, as I've talked about not only on here, but on the TikTok stuff I'm doing as well, that 57.12 was kind of the overhead supply zone that we're looking at as a stall point here, and we rallied into that on Friday. Now we kind of have a bearish Rami formation forming right at that level today. You know, the big question is, well, where do we go from here? You know, I'm hearing multiple things, and of course I talked to a bunch of my trader colleagues and friends, and I've got a very mixed camp. I have some that are incredibly bullish, I have some that are incredibly bearish, I have some that are middle of the road. Just curious what you guys think is going to happen over the coming week. And while I'll give you a little time to fill in the survey here, so as you guys roll in, click that survey, it should be in the chat for you. As I give you a little time to fill out that survey, let me give you my kind of 2 cents on this. When we look at the price chart, what's happened with that S&P over the past couple of weeks, phenomenal. I mean, everybody here is looking at the month of April going, as apart from the first 3-day sell-off or 4-day sell-off, it's been absolutely fantastic. You got to love it. Now, why did we get this kind of rally up? It's because we have this reprieve on tariffs. Not that it's over with, not that we're out of the woods yet. It's a reprieve and a pause on reciprocal tariffs, backpedaling a little bit by the president. And as I mentioned, you know, my belief is that Trump is the master of shock and awe. And initially on April 2nd, we had that shock factor of, here come reciprocal tariffs, and pretty heavy around the world. And then all of a sudden it released a little bit, and we got a little bit alleviated some pressure. It almost feels like Trump's about to jump in again and do something that will cause a shock factor, right? We've had just too much calm. I mean, 2.5 weeks of calm just seems crazy for President Trump to have. We need something wild to happen here soon. So that's my 2 cents on it. Let me show the results of it. And if I was in your shoes filling out this poll here that's in the chat, I would be in the sell-off category. I don't think it's going to be a dramatic one, but I think we'll have a sell-off. So here, I'm going to end the poll here. Let's see. Yeah, we got a small group here today. But it looks like 34% of you said stay right where it's at, so pretty much a flat week. We have half of you saying sell-off, and then 15% saying we're going to have a market rally. And I think those that said market rally are really looking forward to Wednesday, right? When we look at what Jerome Powell is going to say with this rate statement. Right now, the expectation is that markets are going to, or that the rates are going to stay right where they are at. But let's see if that has shifted at all over the weekend. So here is your rate announcement forecast for the Wednesday meeting, which is May 7th. And you can see here 99% probability that they keep rates right where they're at, which is about 4.5%. So not worried about that. Now, maybe by the end of the year, let's see how that looks now. Right now, the end of the year, there's about a 36.7% chance that we're going to get 3 rate cuts between now and December, which certainly could act as a catalyst for the market to move to the upside, but only time will tell if we actually get those ones. So that's where we stand today. No rate cut at the Wednesday meeting, which is pretty much priced in. Any surprise there, right? If we get a shock drop where he says, we're drop 25 basis points, I think you'll see this market rip to the upside. And those of you in that 15% category that said market rally, well, you can take a victory lap because it will probably happen. Do I really need TikTok, or can I get it all here? Yeah, you can get it all here. MTB, so Trading Academy wanted me to do something where I do a very quick, 1 to 3 minute thing about what's happening in the market every morning. So before the markets open, that'll get released, and it talks about the big earnings names, what happened overnight, and some basic levels. But yeah, we'll pretty much get that all here. Yep, absolutely. You don't need to have TikTok. Trust me, I hate TikTok. I'm not a TikTok fan. But in order to reach, get Trading Academy more reach, we're decided to do that one. So yeah, you don't have to join TikTok. But those of you who do use TikTok, follow Trading Academy, and I'll try to put more content out there just to build more engagement on that media channel. All right. I know, Liz, I was a little bit late. And by the way, I hope you're having a great vacation down there in the Bahamas. I'm a bit envious. Garfield. I really wish I was sitting on a beach somewhere enjoying a nice frosty beverage. Instead, it's gloomy and cold out here in Southern California, but it's supposed to change. Weekend's supposed to be very, very, very hot. Yeah, never use TikTok and don't plan to. Yeah, it's a waste in my opinion, but oh well. All right, so let's dive a bit deeper into our markets today. Again, it seems like we've got a preponderance of this audience anyway is on the more bearish side. Let's dive into those markets and show what's moving today and maybe what the rest of the week looks like. So there's my graphic for today. Yeah, I like this one. That was pretty good. Kind of people just holding their heads like, not sure. Really kind of a mixed bag here from a market trajectory. It is Cinco de Mayo, Margarita Day. I'll probably go out and have some tacos tonight, and I'm going to the gym. I've been neglecting the gym just because I've been so busy, and this week things lighten up. So I'm going to go to the gym, so no drinking for me tonight, but I will eat in honor of Cinco de Mayo. So the big name to come out with earnings is Palantir. That was your bigger name for today, so let's take a peek at Palantir. I love that this the earnings correspondent, I'm pilfering from them so they can do the work, and I don't know. He says doing the job for you. I appreciate that, earnings correspondent. It makes a nice little tile here that shows the earnings statement, which is great. It says earnings per share. Look, they came right in line with expectations, and I think that's why the markets did not like those numbers, and we'll look at the chart here in just a second. Their revenue, though, great. They expected it to be $862 million. They came out at $883, so they beat revenue by 3%. You had the earnings per share year over year is up 63%. Revenue year over year up 39%. Revenue up quarter over quarter 7%. Which seemed, yeah, that's right. And then earnings per share down 7% quarter over quarter, which I think that's kind of an interesting one. But anyway, that's the bad news out there. Now, Palantir's price looks like it paid a little bit of a choppy chop here. I saw it tank after hours, and I was like, ooh, maybe this will be an opportunity in the morning to sell some puts, collect some premium on it. But I don't know. It's moved too much for me. I like Palantir when it's a cheaper stock. Having rallied over 100%, or about 89% off of its lows makes me a little bit nervous. So right now it's down about 6.8% after that earnings announcement, or right as that earnings announcement came out. It ended up dropping all the way down to about 9.29% slide there for Palantir. But what concerns me isn't, this little drop. This, to me, is almost an academic drop. Well, you look at the daily time frame here, and this is where you get kind of a little bit nervous. You are right into the all-time high that goes back into February of 2025. So you got a giant double top. And more concerning is this rally where it's gone up. I'm going from trough to peak. I'm going from the low point here on April 7th to the high price of today. That is a move of 89.44% in 19 days. I just have a real hard time trying to buy something that's moved up that much. So this makes me a little bit nervous that a lot of this was already priced in, and the expectations of Palantir have already been built into this earnings number. It sounds like everything was roses for Palantir, yet here we go with a pretty ugly day. Hello, Rita. Good to see you. Yeah, so this is your big piece. Now, granted, Palantir isn't like a major component of the S&P, NASDAQ, and Dow, right? It's not this heavyweight like we saw the last couple weeks with Microsoft and Apple and Google, Amazon, etc. But it does give us an idea as to how the growth in that AI industry is going. And Palantir, a lot of people think it's one of the best companies out there. I don't know. I'm on the fence about that. I did write an article a while back, actually about 2 years ago, talking about how Palantir should be in your AI portfolio. But there we go. So that's your big news for today was Palantir. I did see someone in chat mention this. You had Ford release some information today, which was not very good, right? They also came out with their earnings today. I didn't see the final numbers. I'll have to look those up here in just a second. But what was interesting hello, Chio. Good to see you. Hey, Daniel. And Rita, good to see everybody. Ford made a statement I thought was very interesting. They basically said, look, we are going to take a huge charge here on these tariffs. They estimate $1.5 billion hit because of tariffs. And it wasn't just Ford. I think Mattel was talking about, Barbie and how they're pulling their forecast for this quarter because of tariffs. And this is now, I think, becoming the common thread. We saw it happen with Tesla. We saw it happen with Ford. Now here in Mattel. I think more and more companies this earnings season are going to go, we're just going to hold off on our forecast here because we just don't know, right? I mean, it's the perfect time to do so. I think you'd all agree that when you have this kind of uncertainty, why not? If I was a CEO, I think I'd probably pull my forecast too, or just make it so unbelievably low that I could jump over it with anything in the future. So yeah, there's Ford. Let me see if I can find the Ford earnings statement here. I didn't have it set up. Let's go. Oops, that's not what I wanted. I didn't see what their numbers were, but I will bring it up for us right now as I go to my earnings calendar. And for those who want to know, I use Zacks.com, but there's a ton of different earnings calendars out there you can use. So they haven't, it doesn't look like they've released yet, although it's kind of interesting. When you look at ticker symbols, the rule of thumb they've clearly did not do so well. The rule of thumb has always been, if it's a New York Stock Exchange symbol, which would be 1, 2, or 3 letters typically, they're always before market open, and NASDAQ, which is 4 or more letters in the ticker symbol, used to always be after hours. And unfortunately, they've started to blend those. As you can see here, Ford reporting after hours today. It's a New York Stock Exchange stock, and it should be before hours. Darn it, why not? Margaret says, I agree with Ford in the perspective of, remove your forecast. I think so too. I think it makes a statement. I think it makes a political statement without actually saying anything. Like, well, the uncertainty that these decisions are making doesn't help us, right? It's not helping out the cause here, at least for Ford and other car makers as it stands. And as Fury says, that makes investors really jittery. Yeah, it's just one more piece of the dreaded U word of uncertainty. And, Ford certainly getting hit by tariffs as many other companies. Now, I don't know if you guys saw this one, but I'm going to try to do a special show with Larry. Now, Larry is in Irvine this week teaching, so he can't make it on this week. But maybe next week we'll do a special about the man, the myth, the legend, Mr. Warren Buffett, who, as you guys know, the Oracle of Omaha has officially stepped down. By the end of the year, he'll be stepping down. And on his way to retirement, which honestly he should have done long time ago. Now, what's interesting about Mr. Buffett is he has a 60-year track record of beating the S&P 500. And you guys heard me say a while back that what's my goal? My goal as a trader is just to beat the S&P. It's not glamorous. It's not, anything crazy, outlandish goals. It's just beat the S&P. And he's done that for a long time. Pretty impressive. And Larry's a huge fan. He's been out to the event in Omaha, Nebraska. Not this year, but we'll talk about that maybe next week and go a little bit more in depth with Warren Buffett's retirement, what it means, maybe talk about his legacy, the philosophies of Warren Buffett, because I think we could all learn something from him. Granted, I think that there's some pros to Warren Buffett's style, obviously the results, but also there's some negatives to it as well, which would be, in my opinion, the ignorance is just kind of too harsh of a word. But his unwillingness to embrace brand new technologies. He's got to go tried and true, give me Dairy Queen because I can go in and get a burger and a milkshake, right? That's his philosophy on businesses, which has worked very well, and buy them when they're extremely discounted. But, one thing that was interesting about, Luis, phenomenal rate of return. I mean, honestly, congrats, dude. He did something that very few people have ever done, if anybody has ever done, that rate of return. Maybe Peter Lynch, but he also made some very, very harsh, aggressive comments about tariffs and how foolish it was to, I think, guys, when we started this whole tariff war thing, I've been saying, the big problem I see is you're making enemies of your good friends. And you've tried to maintain these friendships over years. And I think Buffett did a good job of articulating that on how he felt this was just a really bad decision, at least the way they've gone about it. So, tariffs hurting everybody, even Warren Buffett getting in on the game. And he's like, I've had enough. I'm moving on. Get me away from this tariff situation. I'm retiring. Gotta love it. Good guy. I wish I would have been able to meet him in person, but Oh, well, I think he still drives like a Honda Accord or some real simple car. He drives a real basic car. Other news. Let's go back to our charts here, and we'll bring up a daily candle. I'm going to go from the bottom to the top and work our way up. I see Chio asking me what's happening with Bitcoin. Is the 4-year cycle over? Is it still on? Well, in my mind, it's still on. It's just every single day that we kind of get stuck in the mud makes me wary about it. And I think the big variable that I've mentioned to you guys over the past couple months has been what I believe, and I have no evidence of this, but I believe this is what's happening, is fractional reserve lending on the part of the exchanges, where Coinbase or Fidelity, let's say they actually own, I'm just going to make up an example, let's say they own 1,000 Bitcoin, and that's all that they own, right? That's their hand, that's all they've got from all their customer deposits. But if you look around at all their customers who have been buying from Coinbase, they may have 50,000. And they're leveraging out, just like they did with gold many, many, many years ago. That's how paper money came to be. You had a physical asset that people were going to store with you and probably not move for a while. Therefore, you could issue pieces of paper that would redeem for a little piece of that asset. And I think that that's what's happening. So in principle, what that means is you have 21 million Bitcoin total supply, but because of this fractional reserve lending, we could have a couple 100 million. I mean, it depends on what the limits are and how these firms want to leverage themselves out. So hopefully the regulators and the oversight entities are checking on this, because to me, this could be a big problem for crypto going forward. If they keep selling Bitcoin they don't have to customers, that obviously could be a recipe for disaster. There's a point where a little bit of leverage is okay, but if you put a lot of leverage, just ask Lehman Brothers and Bear Stearns, it can put you out of business very quick. So I still think we're on. I still think Bitcoin's on, but let's run through our top 7 here. I'll start at the bottom, actually, since we're on the Bitcoin price chart. You saw it today. We had a shooting star on Friday's session, had a pretty nice gap down today. Rallied a little bit, tried to recoup some of it, but I would probably just put a box around the price action for the past couple of weeks. Let's just do that and call that our general range. And use that as kind of your guideline. For the people listening to the podcast, I'm looking at about 93,400 up to about 98.6. So yes, I know that's a $5,000 range. That's huge, but not necessarily for Bitcoin. It's about a 5% range there. And right now we're in the middle of that range. So I don't see anything that exciting happening with Bitcoin right now. As I mentioned at the beginning of this month or last week, I said I do believe that we will be at that all-time highs of 108 plus by the end of this month. And I think that has to do with just a lot of the adoption. You got Jack Mallers starting 21 Coins as a brand new kind of major company like MicroStrategy, right? You've got Michael Saylor constantly buying. Of course, we don't know if he's actually buying, but you have MicroStrategy constantly buying, and now 21 Coins coming in with major backing, including SoftBank and some significant firms, going to start doing the same thing as MicroStrategy, and that increases demand exponentially. And to me, that should start to act as more of a push up on price. I'm also hearing more and more talk about potentially U.S. selling gold and going into Bitcoin, which would really be interesting. But I haven't heard any concrete on that. Just kind of rumors floating around that the U.S. is going to sell gold, its gold reserves, and buy Bitcoin. But who knows? So that's your worst performer today, was Bitcoin, down 2.85%. Now, granted, that's not today. That's really over the weekend. Anytime we quote Bitcoin, it's probably best to go look at the spot price, and you can see that today, Monday, it's actually been relatively flat. The sell-off happened Saturday and Sunday. That's why you always want to trade spot, not the futures. So over the weekend, it fell 2.7%, but today, if you go off of today, it's actually up on the day 0.29%. The beauty of looking at things from different perspectives. And I think when you look at that range, that yellow box that I drew earlier on the future side of things, let me draw it along the spot price. It does feel, and this is tricky, like where do you draw this price from? Again, I've mentioned the prices here on the futures. The spot price is right around, let's call it 93,000 up to 98,000, still that $5,000 range. We've been kind of traversing sideways for a better part of a couple weeks. You had a big surge up on Thursday of last week, and now giving that all back. The key here is really that we hold. Right? If you can hold 93,000, I think we'll be fine. We'll continue to move up for the remainder of the month. It's a break below 93,000 could cause more selling to come into play here, because we have this not unfilled gap, but this big move that happened here on Monday and Tuesday, back on April 21st. And that could be, if we do break 93, we could find ourselves back at 85, which I would not like. But, you know, Chio, the longer this goes without having a significant rally, the less likely that target's going to get hit that I have of 250,000. I still stick by it, but it's just getting more and more difficult to rally that much in a short window of time. I mean, I think we'd have to have, 250% rally from current levels to get up to 250,000. You know, to do that by November, that's going to be a heck of a move. And it certainly could happen, but Margaret says buy here. Well, I don't know if I would necessarily, this isn't really a strong demand zone. Based off the supply and demand methodology you would learn at Trading Academy, this is not a strong demand zone, but it is a point of reference where price has not been able to go down below for the past few weeks. So it's stabilizing there, much akin to what it did back here between April 12th and April 20th, right? It just kind of traversed sideways, and the longer it goes sideways without breaking a low, the more likely it's going to move up, right? Because you don't have the profit taking is just not there. So we stay above 93 on the spot price. I think we're in good shape. Again, we'll see what happens for the remainder of the week. Wednesday is obviously going to be the big differentiator. Anything can happen with Jerome Powell at the FOMC meeting. So let's jump back to our Bitcoin prices here. We got crude oil as well. I wanted to briefly talk about oil, and again, I need to bring on more experts or look up more experts on oil here, because it's the crude oil chart, as John Rowland talked about. Again, he said the extraction cost is between $60 and $65. Well, here we are now at 57, and we've double bottomed. I will put a horizontal line right across the bottom here. Bam, there's your bottom. You know, we're right at $55. We've double bottomed there, and it begs the question, if you do fall into the camp that believes that we are looking at a $60 to $65 extraction cost for a barrel of oil, by that rationale, it means that crude oil is a smoking buy at 57, right? Now, again, I don't know. I'm not an oil expert. I just watch the price charts. I didn't see the OPEC Plus news today. Why are they increasing production? Maybe to be on the good side of the U.S.? I don't know. I didn't see that, Les. If they're increasing production, to me, that would just be bending the knee. If they wanted to do what they really should do, they should be cutting production. Cut production, get more per barrel of oil, but I don't know. I haven't dove into that one, Les, so I can't make a statement off of what they said because I didn't see that one today. But typically, you know, when they're cutting production, when they are increasing production, it's trying to drive the price of oil down. And maybe by driving the price of oil down further, it becomes a political chess move. Because remember, if John Rowland was saying that, again, 60 to 65 is what he feels is that baseline for extraction costs for the U.S. So if you either comply with the president's demands to increase production and push oil prices down, or the other side, the way you could look at this is, it could be OPEC looking at the United States and saying, oh yeah? Well, screw you. We're going to increase our production, and we're going to drop the price of oil even further. And if we can drop that price of oil down to, let's say, $45 a barrel, then all of a sudden, all of these U.S. companies that are looking at $60 extraction costs are, twiddling their thumbs going, well, we're going to stop producing. And that could hurt the U.S. economy. So I don't know which side of the fence I fall on here, whether this is good because it's going to, Trump wants lower oil prices, or if this is a threat to the United States, as Les says, yeah, we can't afford to drill. If we drill, prices are going to continue to go lower and lower and lower. Let's be fair. For you and I as consumers, do we want prices to go lower and lower and lower? Absolutely. Right? If crude oil continues to fall, which it's been doing for quite some time now, really been since 2022, it's been just drifting lower and lower. If crude oil does continue to fall because of increased production by OPEC and increased production because of drill, my guess is they'll remove some of the subsidies for the government, for companies from the government, and really try to make it as profitable to drill oil as cheap as possible. This could certainly go much lower. And that, I think, would have a big impact on inflation. So Trump would feel great because he's got inflation under control, the price of oil is low, but there would be some businesses, in my opinion, that would be hurt from this. Certainly oil companies, and you could look at CVX. You know, you got Chevron and ConocoPhillips. I mean, Chevron was up at about $170 a couple weeks ago, and now it's down at 135. So they're feeling a little bit of pinch. Let's go ConocoPhillips. You know, ConocoPhillips has been selling off since March of last year, like fairly aggressively. It was up at $133. Now you're at 86. You look at ExxonMobil. You know, ExxonMobil feels like it really has done nothing since 2022. And now we are drifting lower. To me, your line in the sand here for ExxonMobil is right around $96. So, yeah, I'm not sure. This could be a big political chess move on the part of OPEC. I don't know. It does signal, though, that prices of oil are going to continue to go lower, which is the trade-off here. I look at that U.S. Crude oil chart, and for me, yeah, I do feel like it's going to go lower because of all the drilling and everything, but that is a double bottom pattern. So for me, it's almost worth it, and I may tomorrow, I'll let you know. It's a total risk, is I may take a shot at this one by buying long here on USO at demand, and if we get down below it, I'll have a tight stop loss and I'll take a loss. But this could be a nice little bounce here coming for crude oil because of that lower price around 55. Granted, everything right now is pointing at lower for crude oil. Market says, look at the bearish gaps on XLE. Oh, XLE. This one's been wild lately. These big unfilled gaps. That was the reciprocal tariffs part. It's funny because I remember I had the supply zone drawn in, and I actually made this. I was short on this day right here, the 27th of March. Actually shorted XLE and closed it out it was just a day trade. And I look in hindsight, it's like, goodness, man, I wish I would have held that for the next week. We fell all the way down to 74 and change. Crazy. But remember, the whole market looks like this. But yes, we do have unfilled gaps. Nuke, baby, nuke. Hey, I'll tell you, Andres, I'm with regulation, with oversight, I put myself in the camp of go nuclear. I think nuclear is probably the way to go. I do believe we have the infrastructure and the technology to do it safer than we ever have. But, you know, we love coal. We love fossil fuels. Let's go nuclear. Go nuclear. All right, so that was your seventh place was crude oil. Again, double bottom formation there on crude oil. If you look at things like the Russell 2000, today is a bearish Harami formation. Now, we have not closed the gap. I talked about last week on how I thought we'd close this gap at 2,095 for the Russell 2000. Nope, did not get that today. We actually have a very popular Japanese candlestick formation here. So let's go back to our candlestick discussion, which we talked about. I think we had a couple questions last week on that. This is a Harami formation, and typically what happens in a big uptrend, on a real powerful move, you get this little tiny red candle. I'll zoom in here so we can make it big screen for you. It's the last two candles on the right. So we've had this really big up move, and since it's on the Russell 2000, I'll give you the percentages from the low point we saw on April 9th to the high point yet on Friday. You're looking at a gain of 19.03% for the Russell. So great momentum, a lot of buying sentiment, and then today, no real sentiment. Actually selling slightly down, condensed small range, and the key here for a bearish Harami formation is today's candle must fit completely with tails and all inside the previous day's candle. So in this example, this is a perfect bearish Harami formation for the Russell. Now, two ways you can trade this. I know it's always the question you guys have. It's very similar to my rules with the shooting stars and hammers. I would say from the low of today, which is, let's say if Russell drops below 2,000 today or tomorrow, then there's your short opportunity, right? Because today is just a sign of weakness, of profit taking, and if momentum does continue and more people take profits, you could get a pretty decent move. Now, how far is it going to drop? In my opinion, I don't think it's going to drop very far. You've got this long 5 days of sideways action from April 25th all the way through May 1st. My guess is if it does fall, it'll drop right to that area and stall there. Now, that sideways consolidation should hold it. But anyway, you have that bearish Harami formation on the Russell. You've got the bearish Harami formation on the NASDAQ, which is the exact same picture, down 0.69% today. Then you have the S&P. And look at that, another bearish Harami formation, which is right at 57.12, which was the high top end of a supply zone that I mapped out from a few weeks back, going all back to this move up here on April 2nd. So we've closed that gap from April 2nd. That's great. We are showing a little bit of weakness, which could make for some great short trades tomorrow. I did sell some puts today. Not a lot. I did about half of what I wanted to do, and we'll see if I can. I may go a bit heavier tomorrow if we get a sell-off. But it does feel to me like we're going to have some downside movement, at least tomorrow. Remember, the big key is Jerome Powell. And it's not even really just the rate announcement. You know, at the press conference, they're going to be going, I'll be Steve Leisman from CNBC. Maybe I should change my name. Hold on a second. Let's just do this. Once I have the power here, I don't even know how you spell his last name, but I'll be Steve Leisman. There we go. Chairman Powell, a quick question. This is Steve Leisman with CNBC. You know, given the talk track and President Trump's pressure on lowering rates, we now have inflation seemingly under control with the core PCE price index, unemployment remaining steady at 4.2%, and we see GDP in a stark decline, actually negative for the quarter. All of these would indicate that lowering rates right now would be the prudent thing to do. When do you and your members plan on lowering the Fed funds rate to help this market endure the difficulties of these tariffs? I think that is like exactly the talk track. Maybe I need to record it tomorrow with Steve Leisman's comments. I'll go back to Merlin Rothfeld. I know, I'm a weirdo. That's why I do this show, because I'm weird. But that press conference, guys, is gonna be filled with those questions, and it's gonna be this interesting battle to see, is Jerome Powell going to bend the knee? Is he? Thanks, Andres. Actually, let me do this. Here, I'm going to do a poll, and then we can talk about it in chat. Should the Fed... One second. I'm trying to type and talk. Wednesday. N-E-S. Wednesday. Yes, no. I don't care. All right. Sorry for typos in here, guys, but there's the poll. So my poll is, should the Fed cut rates on Wednesday? What do you guys think? I know I've got my 2 cents. You know my opinion, but I'm trying not to skew your opinion. I'm just curious what you guys all think. I mean, right now, I could make the argument that the data absolutely supports Trump's pressure on Jerome Powell to cut rates. It does. I just mentioned you've got inflation under control. Core PCE price index. Remember, Jerome Powell has said the core PCE price index is the metric that they look at the most for inflation. It's showing deflation. That's off the books then. Then you have GDP, which is negative for the quarter. Granted, heavily influenced by tariffs, but doesn't matter. Still negative. But that the GDP component is not Powell's concern. Unemployment is. And unemployment's remained constant at 4.2%. So there's really, I hate to say it, there's really no argument why Jerome Powell shouldn't. And now, and my argument for it would be he shouldn't, because you don't want to add another dynamic of change to the economy when you have all these other changes going, right? Let's keep something constant for a while and use it if we absolutely need to. But these numbers can be skewed for a quarter or a month, right? And a string of data will be a better indication. So, Noam says, no, don't fight the Fed. All right, I'm going to end the poll here in just a second. Let's see. And don't forget to have a follow-up question, too. It seems like these days all the reports ask 2 questions. Yeah, that's true. To follow up on that one, right, Liz? As a follow-up question, I don't know if I have a follow-up question. All right, I'm going to end this poll. And 36% of you said yes, he should cut rates, and the rest of you said no. Interesting. I'm in the no camp. And again, it's not because I don't think that the market doesn't need it. I think the market certainly would benefit from it. But are we in a dire situation where the markets are like, we've got to juice the market? I would argue we do not, right? If you look at this chart here, the big sell-off here has been the talk of tariffs and the uncertainty. That's why we saw this big sell-off here from February all the way through the end of, early April. As Market says, it would juice the economy, but do we need it? Like, is it needed on the grand scheme of things? No. I mean, look at this price chart. Let's go weekly so I don't skew all these candles and make it look all weird for you. Here's your weekly of it. All right, let me go back to where we are today. Nothing is out of the ordinary here. So, in my opinion, I don't think you need it. I think you save that bullet, if you will, for when you really need to take a shot. It's about being very strategic with these rate cuts, because there's only so many rate cuts they can do. In my opinion, you save those when you absolutely need to. This market, the economy is doing okay. The big uncertainty is tariffs, and what you don't want to do is have this uncertainty of tariffs and then do a knee-jerk reaction and lower rates, because now you have the uncertainty of the tariffs and the uncertainty of the impact of the rate cut. So the best thing to do should be keep it right where it's at. 11% you're saying, I don't care. I love it. Yeah, you should care because it is going to make a big deal for the economy. Is the Fed behind the curve? Everyone will always say that. I don't know. I think the Fed is at the right place. I think the Fed is doing the right thing right now, which is hold, right? It's like Braveheart. Hold. Again, do they always do what they should do? Absolutely not. If we look at what they did last year, they did that surprise rate cut of 50 basis points. That was ridiculous. Right, this rate cut that we did here in September of last year, to me, was absolutely unnecessary. I think that what they're doing right now is the right thing. Staying there. We've had 3 consecutive Fed meetings where they've kept it the same at 4.5%. I think you keep it there because that's kind of a decent historical norm. You keep it there unless the doo-doo hits the proverbial fan, right? If all of a sudden all hell breaks loose and tariffs are, we see massive unemployment and we see GDP plummeting, then okay, now we'll cut. GDP number is a one-off. Let's go back to our advanced GDP from last week just so we can see that data. Bear with me as I'm scrolling through to find the GDP because there's so much data here. But we had that last week at the French GDP. There's our GDP. Our GDP, for all intents and purposes, was pretty flat. We've been flat since October of 2022. A couple little drawdowns. We saw a low point in April of 2023 where we got to a 1.1. But the next month, we bounced back up to 2.4. And the historical norm, just so you guys know, is right where my cursor is at 3.3. So yeah, we're a little bit lower than historical norms. I would argue that this piece right here for April is one-off. It's a one-off piece of data. I would wait another month, and once it goes advanced, preliminary, and then final. I'd wait another month if I was Jerome Powell to really start to think about potentially cutting rates. But hey, I don't make his big 6-figure salary to adjust rates. I wish I could. Let's see. Is it normal to get inflation under control and then immediately juice the economy? That's what I'm thinking, Les. Like you finally have it under control, and remember, it's under control because of energy prices. My eggs have fallen, but a lot of other stuff in my store is not dropping in price, right? Rents are not going down. Rents are actually still going up. So it's energy, this 1-point data that has inflation under control. So I don't think you raise. I think the Fed, by holding, makes it clear that they're not sure if inflation is out of the way yet because it's been manipulated by energy. It's one of the major components of it. So if we look over here, let's say crude oil, here's your weekly on crude oil. Gee, I wonder why inflation all of a sudden looks like it's under control because crude oil has fallen in the past 16 weeks, 29%. Of course it's going to look great, right? So if this starts to bounce back up, then inflation could be back on the table again. So Jerome Powell's doing the right thing. I think he's doing the right thing, not giving in to President Trump. Trump wants it. I mean, if you were president right now, you would want them to cut rates. Absolutely, because you need that little extra juice for the economy so you can go, see what I've done? You see what I'm doing here? Oh, this great chess game. It's fun to watch, isn't it? I feel like I'm watching, a chess game being played, but it's 3-dimensional chess. It's Jerome Powell on one side, Trump on the other side, and all these other government leaders around the world. It's like an 8-dimensional chess where you're watching all their little tiny moves. I don't know. Maybe I'm a weirdo, but I love that type of stuff. I love it. Lead says, my electric bill is up 20%. Everyone is posting online that theirs is too and want to know why. Yeah. Look, my energy bills here in Southern California, highest they've ever been. I'm shocked. I go back a couple years and, man, my bills were very, very affordable. Now it's like, oh, another electric bill for $250? Like, I don't even use them. It's the studio lights that do it, even though they're all LEDs. Liz says, I believe a recession is designed as 2 consecutive quarters of negative GDP. Is that final GDP only that is considered, or can advance and preliminary GDP forecast count? I believe it's the final GDP. So they'll go off 2 consecutives of the final GDP. But, having the most recent reading, which is the advanced, point to negative 0.3, not a good sign, right? Usually what we do is we get a little, there is some variance here between advanced. Of course, in 30 days, when we get to the end of May, we'll get the preliminary. That'll be the second reading of it. And my guess is it'll probably pop up a little bit. I'm not 100% sure either, Liz. Not 100% sure, but I do believe it's off the final. Right? Exciting times. Exciting times. All right, let's see. What else I have here? Comments from you guys. Wouldn't kickstart more business to borrow more money by lowering rates across the spectrum? Manufacturing is slow in the country. Yeah, and futures trader, here's the real deal. Everybody, just for a second, put yourselves in the position of you run a big business today that's doing business all over the world. Let's say you're importing stuff from other parts of the world. If all of a sudden rates dropped today, and you guys type in yes or no in chat here in just a second. You run a big business, it's a multinational corporation, you're the CEO, and all of a sudden the short-term interest rates dropped, and you know that you could borrow money cheaper today. Would you go out and get a big loan? Hey, Don, good to see you. Would you go out and get a big loan? I know that if it was me as a business owner, I would not, because the future is too uncertain. Way too much uncertainty for me to say I'm going to get, because remember, if you get this loan, I've got to do something with it. What are you going to do? You can expand your business in the face of all these tariffs and global uncertainty? Yeah, I agree with Andres. It's not about the rates. It's about what can your business do? And if all of a sudden you have somewhat financial, let's just say, global oppression because of all these tariffs, it's not allowing you to grow like you would, then why would you invest a bunch of money in your business until that uncertainty is removed? So, interesting. Some of you said yes, some said no. How would it be if Powell gave in? I don't think that would be as good as people think. I don't think it would be that good either. We just talked about this a couple of seconds ago, Don, and my belief is you already have enough uncertainty with all the tariff stuff. I mean, heck, now he's tariffing, foreign films 100%. Okay. So, he is right. Let's be honest. Trump's right. I've watched a bunch of movies lately, and they're all filmed in Singapore and Vietnam and Thailand. It's like, cool. I don't have a problem with that, but trying to bring Hollywood jobs back. He's trying to get those Hollywood liberals back on Trump's side, huh? I don't think it's the right thing to give in. Hopefully, Powell will stay in his lane and do what's right for the economy and not give in to 1 point data. I have a pet grooming business. People love their pets. Okay, that's different, Rita. I mentioned, when I said in there, I said a multinational corporation, meaning you're doing business with Europe. If you're a local pet groomer, heck yeah, go for it, right? You got cheaper money to borrow and build out your facilities? Absolutely. Big difference there. But let's say you sold, I don't know, you manufacture these earbuds, these really high-end microphone earbud things, right? American brand, American made, and you ship them all over the world, and now all of a sudden there's tariffs on this, tariffs on that. I don't know if people are going to cancel their orders because of all the tariffs. So I would hold off. What will happen if Trump becomes Come on. Trump ain't going to become the new pope. Are you kidding me? Okay, I apologize if I offend some people here. But how many of you, yes or no, think that that President Trump can recite a verse from the Bible? Just give me any verse. Give me Genesis. Give me a Psalm. Give me Gilgamesh. He could probably recite Gilgamesh, right? After 14 leagues before him and behind him was nothing but darkness. After 15 leagues before, I mean, come on. There's no way this guy could recite a five. But hey, he's anyway. I know I'm going to offend people, so sorry. My apologies. I'm not trying to offend anybody. I think it's humorous that he always is trying to do very religious things. Like, I'm pretty sure you can't recite anything from the Bible, Mr. Trump. Good. We're all on the same page here. It wasn't intended to be anything religious and offensive to religion. Please don't take it that way. It was just that he says he is, and you can't do it. Not required to be the U.S. president. Well, that's true. Not required to be the U.S. president for sure. But remember, he says so much stuff about religion, and I know he's using that to get that audience to help to support him from a conservative perspective. But Mick, I'm not even sure he can read. Pretty sure he can read, but although it is funny when he's in the office signing, he's holding up the bill. He's like, which one's this? Which is this? And the guy's always like, oh, President Trump, this is the bill to, create a strategic Bitcoin reserve. And this one's huge. This is really important. This is a biggie. It's great. If you have exposure to tariff as a business, is the question you want to ask. If you have. Yeah. Yep. Absolutely. All right, where are we at here time-wise? Holy cow, we're nearing the end. Let me get back to the last little bits here, and then we'll wrap up for the day. So right now, the GDP, the unemployment, the inflation data, that's key. And again, Wednesday, we'll talk more about that. Oh, we don't even know chart of the week. My buttons are all off. I must have, when I increase my my window here, my buttons all get out of sync. Let's put them back where they belong. There we go. All right, let me go back to our final few here. We didn't quite get the top of the list. Somehow all of my screens are messed up. My apologies here. There we go. That's what I'm looking for. So we made it up to through the indexes. Again, all these guys have a bearish Harami formation on them right now. Not on a weekly, but on the daily, we have a bearish Harami formation on the S&P, NASDAQ, Russell. I don't look at the Dow because who cares about the Dow. Now look at our dollar index. So our top three here, the dollar index, which we've been watching this, bouncing back and forth in between this sandwich of price here. Bye, Liz. Have a great one. This sandwich is in price here on the dollar index right around between, call it 90, 98, and 100. And we're just bouncing back and forth. Well, we hit the upper band there, which was the upper band of that yellow box is 100.27, call it 0.28. And we're starting to sell off from that one. So trend is still your friend until the bend at the end. Dollar index still going down. Remember, the lower that goes, that should act as a catalyst for the equity markets to the upside. Now, your bond markets, we've talked about this repeatedly. The higher this goes, the worse it is for the U.S. economy, but I don't see any real trend here. I see just massive indecision, massive chop, massive volatility. Let's, for the sake of the U.S. economy, hope that this continues to go lower. But if China and other countries continue to sell their bonds, this will keep on moving up, and that won't be good. And finally, sitting at $3,322 per ounce, gold today. We talked about it breaking this little red line at 32.70. Coming back down to this area of demand that goes all the way down to 32.08. We actually came all the way down to the very bottom of that zone on Thursday of last week. We came down to a low point of 3,209, and the bottom end of my yellow box was 3,208. So $1 off the low, and all of a sudden, nice big rally to the upside. This tells me, from a technical perspective, you're going to come back to all-time highs here on gold, right? It's just a pullback in the greater scheme of things. Trend is your friend till the bend at the end. And if that next tariff talk shock shoe drops, that was a tough one to say. If Trump does something wild again with tariffs and play hardball, which I think will happen. Again, I think he's going to come back and say, okay, we've given a pause on reciprocal tariffs. We're going to put them in play now. And that's going to happen on, I don't know, March 30th. Well, I'll give a date, and then we'll go forward on March 30th and then backpedal a couple days later. The art of the deal, right? The art of the deal. So I think that uncertainty that's still coming based off the relief we had for the tariffs is probably going to come here and push gold even higher. Marco says gold still has their weekly shooting star. It's still in play. Let's bring up that weekly for you so we can take a peek at that one. It's still there, but we did break the low. So in my opinion, you're already in it. Sadly, there was no big follow-through here. So unfortunately, no follow-through. When does that shooting star become irrelevant? In my opinion, it already is. Once we broke this red line, and the red line on your screen is $3,270. Once we broke that to the downside, that was your trigger to go short, and then it just bounced right back up. So remember, when you're going in with a shooting star, typically you're going against the trend. That's the big problem with shooting stars. All right, what do we got cooking for your economic calendar and earnings for mañana? Well, we got to go back to today's action. I'm over here on last week talking about GDP numbers. For tomorrow, the 6th of May, we have quite a bit of manufacturing and services numbers coming out for the rest of the world. You've got some for France, you got some for Spain, you got some for Italy, France, Germany, and the whole EU, as well as the British pound with their services PMI. And then for the U.S., not a lot of big stuff. You got the TIP economic optimism numbers. You also have the 10-year bond auction, which will be interesting to see. And in my opinion, that's pretty much it. So the last thing we have here is your earnings calendar for mañana. 388 companies reporting tomorrow, and there are some biggies. AMD is your big name. You've got Ferrari. Let's see if they get hurt by the tariff talk and the tariff wars. We got Ford saying they're going to take a $1.5 billion hit. Let's see if Ferrari gets hurt by this as well. But you also have Arista Networks, Nintendo, Duke Energy, Constellation Energy as well. What else we got? Marriott International, American Electric Power, Energy Transfer Partners. Some big names in there. Suncor Energy. So a lot of energy companies reporting earnings tomorrow, which should add some nice volatility to those of you trading XLE. All right, that's going to do it for me today, everybody. Hope you enjoyed. Hope your trades are green. I did sell today. So I sold NVIDIA 110 puts, and I sold MicroStrategy 370 puts. See how that'll pan. Just weeklies. I did half the position that I wanted on MicroStrategy. We'll see. I'm a little wary about MSTR and Bitcoin, just the way it moved today, but we'll see how it pans out going forward. So that's it, everybody. I'm going to wrap up here. Hope you guys enjoyed. If you have anything you want me to discuss on tomorrow's show, or questions, comments, feedback, whatever you got, send it on in. Email me at tradermerlin@gmail.com, or put them down below any YouTube video, and I'll bring them into tomorrow's show. Take care, everyone.